This video will help turn your monthly business costs and revenues into annual projections. It will also help you see some key business ratios at the end. Now you can get started by opening up the template called Month and Annual Financial Projections and take a look at that. Now let's start on the first tab where the worksheet prompts you to enter personal financial information. The money coming into you on a monthly basis goes in the top part labeled personal income. Let's say you make $4,500 per month in business income. This spreadsheet automatically annualizes that to a $54,000 annual income. Next, you can input what you pay on a monthly basis for some common debts. Let's assume you have an $800 rent payment, a $225 car payment, and about $150 per month in credit card debt. Just by inputting those numbers, you can see where $14,100 of your money per year is going. The next section of this worksheet is where you can estimate other common personal expenses. I'm going to just fill in some numbers here, and you can see how the spreadsheet adds up your other expenses to account for where all your money goes. Now this spreadsheet also should be used for converting monthly business numbers into annual numbers, so let's move to that tab labeled Business Financial Information. I'll make up some monthly sales and revenues numbers plus other income, which you can immediately see projected to an annual number. Below the income section, we can enter some of the common business expenses we see every month. Again, when I do that, I get to find out where all the money is going. The better my monthly numbers, the better I can see the annual projections. It's very cool then to see your total business cash flow projected over the course of the year. And by the way, one quick note about this. Converting your monthly business numbers to annual numbers works best if your business has consistent numbers throughout the year. If you have a very seasonal or fluctuating business, obviously take this all with a little bit of a grain of salt. Now, are you ready for the punchline? The third tab, Analysis and Ratios, tells you some of the best information around. You can start to see your business the way a lender sees your business. Now, very typically, we rely on these big three numbers shown in bold. First, what's your total cash flow per year? Both your personal income and your business income. And as you can see, this pulls in numbers from the first two tabs to give the total. Second, and now you are really going to be thinking like a banker for better or worse. What's your personal debt to income ratio? This is simply the total amount of your personal debts divided by the total amount of your personal income. A smaller percentage is better here because that shows you don't have a lot of debt, and bank lenders want to lend to people without big debts already. As it says in the fine print here, your bankers won't lend when your debt to income ratio goes above 50%, but every lender can set their own cutoff. Third, and here's another way to see the world the way your banker sees it. Your business debt coverage ratio, which is simply your business income divided by your business debt. The bigger the number here, the better, because it means you have a lot of money coming in every year when compared to your debts. As you can see in the fine print here, your banker wants a debt coverage ratio greater than 1.25, but every lender can set their own cutoff. Now, do you see what's happened here? By filling out the monthly numbers in the first two tabs about your personal cash flow and business cash flow, you've given yourself the questions and the answers in advance of even talking to a lender. That can be a pretty powerful tool in the hands of an entrepreneur like you. Knowledge is power, and you've got yourself some pretty sweet power right there.